Good afternoon, everyone. Welcome to our session today, Decoding CSR Laws and Understanding the recent MCA amendments to the CSR Act. We would like to open this discussion with introducing NASSCOM Foundation to our participants and also introducing the moderator for the day and the esteemed panelists that we have brought together to make this session more meaningful for all of you. I'd like to begin with giving you a quick heads up on the agenda of the day. But before that, let me just set some expectations from participants and the panelists during the webinar. You will notice that the audio for all participants has been turned off. Panelists are requested to unmute their microphones when they're speaking. Also ensure that your full name is visible on the platform. This will help us when we're taking questions. Questions are to be posted in the Q&A box. You will notice at the bottom of your screens, there's a Q&A box and also a chat box. Please be concise and use formal language while asking questions in the Q&A box. Avoid using the chat box for self-promotion or sharing personal details. Your comments and feedback suggestions are more than welcome. There will be 2 polls during the webinar. Please participate in the polls. The window will come up on your screens and you can pick the right answer that you think for yourself and submit. We will share results of the poll right after it is complete. For the session, we have a separate feedback and we will send you the feedback form separately. So during the webinar, you will not have a chance to give us feedback about the session. To give you a heads up on the agenda, I would like to now proceed and introduce Nidhi Bhasin, the CEO of NASSCOM Foundation. Nidhi's been in the social development sector for more than 2 decades. And she's worked around program and team management, regulatory understanding of the CSR law, finance and compliance, among other things. As CEO of NASSCOM Foundation, she works towards pivoting the organization into focused strategic growth by providing employability driven skills to the underserved youth, encouraging and incubating tech for social good, and fostering women entrepreneurship. Over to you, Nidhi.
Thanks, Ritu. Thank you so much. Good evening, everyone. It's a pleasure to be here with all of you. Being a part of the NASSCOM ecosystem, NASSCOM Foundation has enjoyed the privileged position of working with the industry, the government, and the larger civil society to ensure that the positive impact from the initiative translates to all the corners of the country. And this particular unique position gives us the advantage of having a vantage point from where we are able to assess and observe the trends shaping the sector and all social impact work. The turning point in the history was when in April 2014, the mandatory social responsibility corporate law came up. And that was absolutely something which changed the life in terms of the industry and the social sector, the civil society. And the move has clearly shaped up the sector by helping organizations reevaluate CSR priorities and understanding of the impact that cause-based projects can have. With the recent amendments, and there have been many amendments in the last couple of years, and with the recent amendments, some key areas of accountability and transparency have also been addressed. As in the case of any change, there is a lot of clarity that's still needed, and which does make all of us a little nervous. And whether it is the industry or it is the civil society, we all need to understand the newer aspects, and we all need to understand how to cope up with this change. So I'm really hoping that this particular session with some brilliant panelists or certain experts out here will really help us to understand what direction to take, what is the next step, and how do we all really come together to understand this better and use this to our advantage And I can see that there are a lot of people who are change makers out here. And I really hope that all of you will come up with some questions and opinions, which will really help, everybody else also to understand this whole amendment, the law much better, and help the whole industry. So back to you, Ritu. Thank you so much.
Thank you, Nidhi. Thank you very much. Now I would request for the poll, the first poll of the session to come up. Participants, please select from the multiple choice questions that come up. You have 60 seconds to make your choice. I would encourage more and more people. This is extremely relevant for us as organizers to know a little more about you. I'd encourage more people to participate. Please click on the multiple choice. The submit button is at the bottom. You will have to scroll down to go to the bottom of the page and then submit. There are 3 questions with multiple options. Still, many more people could participate. Go ahead. The questions are also for people who are from the social sector. Yes, all the questions need to be answered to submit to the poll. If the industry that you are from is not mentioned, you may choose others. All right, I think we've done 60 seconds. And I'm going to end the poll now. Thank you. There you have the results of the poll. So it seems many of us are from the tech industry, and almost half of us are from other industries that are not represented here. So thank you for your feedback in the chat box from whichever sectors you are in. 82% says that your organizations have CSR focus areas. And so that's very good to see. And the spread in the areas of the CSR verticals that you would wish to invest, skilling and employability has the highest. And so thank you very much. Thank you very much for your feedback. And now we go back into our session. With that, I would like to now introduce our moderator for the panel discussion that's coming up. Vinay Bhatt is the CFO at NASSCOM Foundation, and it is my pleasure to introduce him, who in turn will introduce the panelists. Over to you, Vinay.
Thank you, Ritu. It's wonderful to be in this panel and moderating this event. Yes, it is a big challenge currently. A lot of people, a lot of changes. Without much ado, let me just introduce the first panelist, Mr. Noshir. He doesn't need any introduction, right? So he has been in this. He is the CEO of Center for Advancement of Philanthropy, CAP, and he has been. His career is more than 3.3 decades, 3.5 decades, and he has been in this field for 3.5 decades. And some of us won't have actually even graduated from high school. That's what I could say. So, but he comes with extreme knowledge He has authored several books and has been currently very, very active in the social media and been advising a lot of NGOs and corporates and family makers. So welcome, Mr. Noshir. Right, and to connect with Mr. Noshir, his LinkedIn profile is in the chat, so you can, those who want to connect with him can connect with him on LinkedIn. Now, coming to the next panelist that I would have great pleasure in introducing is Ms. Rema Mohan, the CEO of NASSCOM Foundation, and she comes with 25 years of experience in education and corporate social responsibility. One of the things that I really appreciate or really admire is that she has designed the low-cost pedagogic methods of primary education to impart English language skills to children from disadvantaged communities. So that's a big thing. And she comes with a lot of experience, and she has implemented several award-winning education programs such as Teach India, Lead India, Teach English programs. So welcome, Rema. And coming to the next panel, Mr. Madhu. Madhu is a partner in Deloitte India. Needless to say, he's been in the assurance practice, and he is specializing in digital finance transformation. And he has been a speaker in or present in a lot of forums like ICAI, ICSI, and NASSCOM, and many others. So we have heard him quite often in one of all these panels, right? And he currently also heads the practice of Companies Act and upcoming areas like CSR and ESG. So welcome, Madhu. Look forward for a great interactions today. Okay, coming specifically now, that if I can go to certain questions, just to throw this thing open, I would like to ask a question to Mr. Noshir. See, there has been a lot of challenges while CSR as a law came in 2014, like Nidhi mentioned, but there were a lot of companies which were already doing it through even earlier, like the Tatas, etc. Right? But with now it becoming a mandate, and especially since the new rules, right, in Jan 2021, and further the FAQs, which made even more gave a sort more clarity. I just want to understand your perspective. How has it changed? What is the landscape that it has changed for?
Sure, thank you very much, and a good afternoon to everyone on this panel and the audience. CSR has evolved in this country and the world in a big way and wrong way. As you rightly mentioned, that there was always corporate philanthropy, which was always there in this country, where industrialists believed, even at that point of time, that you cannot have islands of prosperity in a sea of poverty. And therefore, for corporates, philanthropic was quite a necessity and a social responsibility. Fortunately, what has happened is that this law, we are probably the only country in the world to mandate CSR under law. CSR is all across the world, perhaps far more in the US and the UK than perhaps even in India, but the law does not mandate it. I think companies see the value of doing CSR. They believe that it helps hit the bottom line, it helps better business, it helps better relationships. Unfortunately, CSR has been more or less reduced to an arithmetic that if you meet a criteria of net worth, profitability, so on and so forth, you must calculate 2% of your last 3 years' profit and must be spent on activities as given under Schedule 7. There is the scope of CSR becomes limited to giving money. I mean, all over the world, if you will look at CSR reports of the other countries, you will find that they talk about their employees and how many years of employee time was given to the community. Here, you cannot monetize your employees may be doing in terms of CSR. Giving of products is not possible. I mean, you will have to give money to somebody to buy products instead of giving companies products. These are some of the downsides. But I think by far the worst that I've seen is that, this whole idea of CSR standing for corporate social responsibility. Now C has become from corporate to compliance, S from social has become, and R from responsibility has become rules. Comply with the rules, otherwise you're going to be in big trouble, companies. And more, and of course, that's not what the law says. This is what I'm saying in my personal. I think there is some excessive emphasis on compliance. And much as the general mantra for business is that we must ensure that there is ease of doing business, but I do not find ease of doing good. There is enough propaganda done. Some of it is very true. I mean, today companies can register quite seamlessly, very quickly, and all that is there. But I think these are some of the downsides that I see about it. And pardon me if I sound a little critical. This is not offend any lawmaker or regulator. It's just perceptions. And today we are talking about perceptions. I think what has happened, the good side of some of the CSR law, and I will very quickly delve into it this in a couple of minutes and close, because I understand this is not a technical session, that issues that I see is that this time the company CSR policies of 2021 and the FAQ of August 21 has made it abundantly clear that this administrative overhead cap, which is there of 5%, is restricted only for companies. And yet until 2 days ago also, I had at least 3 NGOs coming to me telling me that companies are telling them, oh, make sure your admin cost as an NGO or implementing partner is not more than 5%. It doesn't work that. The law has been clear and one needs to understand it. Some of the other changes which are there in terms of, I'm glad that it is there, we have a negative list now, and the negative list of course may grow over a period of time. Anything that you do, activities which are for the benefit of your employees, is not CSR. Even on this vaccination drive, as you know, many companies said, can we use our CSR funding to vaccinate our employees and their families? Sorry, this is an HR function. This is not your CSR function. If you do community and where your employees incidentally go, it's a different matter. And other good thing is in 2020, we had probably a risk that Ministry of Corporate Affairs wanted implementing agents to be only Section 8 companies. Mercifully, the company CSR rules has now allowed trust societies and Section 8 companies, which is good. New aspects which have come out under this is M&E, monitoring and evaluation, but of course no cap on that. You can spend more than 5% on M&E, but assessment has been brought up for time. What is impact assessment, etc., as we go about in the conversation, we talk. And the concept of ongoing project and other than ongoing project. Ongoing project has been seen as a multi-year project. That means anything which is more than 1 year, but with an outer limit of 3 years, not counting the year of commencement. And of course, penalties continue to remain. There was some talk about jail terms, etc. That's gone, but still the penalties are pretty high. If you have not spent money, there is still a penalty, 1 crore rupees, or twice the unspent amount, whichever is less. And officers of the company, which would include directors and CFO, would have to pay a penalty of 1/10 of the amount unspent, or 2 lakhs of rupees, whichever is lesser. So I thought I'll just give this backdrop, which covers some technical issues as well, but not in detail. And we can throw it up more for discussion later. So thank you, Vinay.
Yeah, sorry. Thanks, Noshir, for that. This is very interesting, that points that you have brought up. I just wanted to now go into the which.
We have lost Vinay, I think.
We've lost your voice, Vinay. Yeah, actually, well, he's logged in, just that we can't hear him.
Just touched upon, and also in terms of cap on admin expenses, etc. The way the CSR programs are run now, what is your thoughts on that? What planning that you need to do as an implementation partner to the CSR activities?
Sorry, is this addressed at me, Vinay? Because you dropped off for some time.
Yeah, sorry. Yeah, it's meant to you, Rema.
Okay, because you said implementation, so out of the three. So I heard what you said, the cap on the admin as well as the unspent funds, if I'm right. Is that what you were referring to?
Yeah. Now, how does it
earlier
impact?
there was, yeah. So see, earlier there was not much of a clarity in the CSR law. It was either you implement and you report or you regret. But thankfully now, after the last 2021 amendment, the FAQs, we have more clarity in what, how to really go forward as corporates. And we, of course, are a corporate foundation. Also, the reporting tables are very clear. So they give a whole lot of information. And, especially the form CSR2, which has recently come out, there's a whole lot of reporting that is required in that. So what is unspent fund? What are the assets that are there? Is it a past project? Is it a current project? Is it going to be carried forward? So it's very clear, and there's a whole lot of data also that's going to be made available to MCA for this. Now, to my mind, I agree that the changes have brought a lot of clarity. Unspent funds specifically, because today I can undertake activities and say I'll do it for the next 2 years or 3 years. If I park it in that account, which is meant for the unspent funds, I can take a long-term view because I have the first year of approval and I have the succeeding years for implementing of the programs. So there's effectively 4 years that I have for a program, which is a good enough time to implement a program successfully. Secondly, when we talk of the admin cap, so earlier again there was no clarity, but now they've successfully taken out the monitoring, review, all those processes, including impact assessment, clarified impact assessment, and culled it into a separate head. Now that has given me scope under that 5% to really hire good talent into the team, because earlier it was on a shoestring, a shoestring team, because you were capped. Everything was capped. It was program activities and all the rest, which went into that 5%. It was very difficult to run it. So I think that's the clarity that we've got. I do agree, with Noshir that all these reportings and the changes can be termed a bit cumbersome. However, my view is that we are looking at a very unorganized sector. And I think we work with close to around 50, 60 NGOs. The type of capacity building, the systems, the SOPs, the processes that we really try to get into. And I won't say educate them, because it's a very collaborative process, where people sit together and say, okay, how do we take this forward? What is it that's required? Also have specialists like consultants and others who are also onboarded for this. I think this has given a huge scope of getting organization into a very unorganized sector. So to me, that's the biggest spin-off that we are getting, this huge infusion of skills into this sector. I would just, like to quote this example. Somewhere in maybe March end or April, early April 2020, we all sat with our NGOs and said, look, this COVID is not going to go away. We know that it's a flag that's being raised. It's a pandemic and all that. But you really need to sit and plan your fund flows. You need to, your organization strategy. What are you going to do? How are you going to do it? And, a lot of them did not have a clue on how they were going to do it. So I think all our audit partners who sat with these NGOs and did this exercise, I mean, at the end of the day, everyone had got, what they wanted in terms of at least planning and, at least they were ready for the future. Yeah, over to you, Vinay.
Thanks, Rema. That's the interesting point that you make there, right? So with the kind of being proactive, etc. So which brings me another thought in my mind, and a question more so to Madhu, since to bringing him in. From a governance perspective, which both Rema and Noshir had mentioned, that there are a lot of rules that are coming in, and with now more and more responsibilities being cast on board of directors, and you have to form a CSR committee, etc. Right? So, what in your thoughts? What are the mechanisms that the board of directors, because they will be at a very high level, and they will not be monitoring the progress of CSR activity on a day-to-day basis. So how would you think that what kind of responsibility, how do they track all this given the so many changes that keep coming in? So your thoughts on that from an audit perspective, from what you have experienced during your tenure.
Sure. Thanks, Vinay. So like I think we have seen, right, this has evolved from 2014 to 2022 now, and this may not be the last, right? I'm sure this is going to evolve into a bigger and a larger journey, right? So therefore therefore companies are looking at it very seriously, right? I mean, if you just take the data of 2021, which is available, with regulators and all of that, right? I mean, we're talking about 20,000 crore plus spent by around 8,000, odd company, right? So the sums involved are quite large. And as companies are now mandated, right? I mean, so therefore, what people are saying is that, look, now that we're spending, now that we've identified areas, now that we are, going to spend this money seriously for the benefit of the public, or, the causes that are listed, we should be serious about it, right? So before even we talk about the mechanism of the board, I think the cardinal principle behind this mechanism or a governance, whichever we talk about, is, are we doing this in a spirit, right? I mean, there is a letter and there is a spirit. I think, most companies are now moving towards saying that, look, okay, there are restrictions, there are rules, there are regulations, but can we now use this money in an effective manner, which can really benefit the public, right? I mean, or the causes that your organization is linked with. Like most things in the law, the onus of this is with the board of directors, like you said, right? So, the regulators have just clearly said, okay, while you have committee, policy, everything, but ultimately it's the board of directors who are responsible for it, which is true for most other things in a corporate law, right? I mean, ultimately they are the governing body. But like you said, board needs to have its own mechanism, right? Board itself is not going to do all of this monitoring, but they need to have effective mechanism to make sure that the funds are used properly, the causes are identified properly, your projects are in progress, the monitoring does happen, etc. So really, some of the steps that, from a leading practices that we are saying is, do you have, if obviously there are companies which have large spends on CSR, right? This runs into hundreds of crores also in many cases, right? So do you have specialists, right? This is no longer a, area where you just take the money and give money to somebody and just leave it, okay, so do something about it, right? That's not the case anymore. So it's a specialized function. Like most function in an organization, this is becoming a more and more specialized function to say, do we understand CSR? How effectively can we do it and monitor it so that the benefits are more productive of it, right? So one of the practices we see is, do you have professionals who understand this space so that, this is executed properly? You could have a, somebody in the, CSR committee or in the board. You could co-op members who understand this, professionals, etc. The other part is just the money or identifying plan is not enough, right? How do you really monitor it like a process, right? We do understand this concept of, when any money is spent, you talk about, control over it and utilization over it and evidencing it. So do you have a strong, robust process, right? From the planning to strategy to planning to, utilization? How do you identify which causes, which NGOs that you do? If you're doing it on your own, what are the people, how do you monitor this? And right up to, I mean, not just spending, right up to the disclosure, and Rema mentioned about the forms that you need to file, right? This is the whole process, right? So you need to have a team driving this process who understand this, right? The owners may be on CFO or somebody in compliance, but this has to be done. One of the other things the board could think of it is, this can't be a one-off activity. Suddenly you're, scrambling around March and say, okay, now have we got this right? Have we spent the money or not spent the money? This has to be more like a round the year activity. So you are regularly tracking the progress and making sure that it is not like you're not definitely taking it, right? You are taking it like any other project, right? If you're spending money, review this. Impact assessment is another thing. I think, Noshir or Rema mentioned this, but really board has a mechanism, because impact assessment for large spends is mandatory. So there is always a third party who is looking at the spends and seeing, okay, what is the impact that you are making on the communities? And that is another mechanism which the board has to say, okay, look, do we need a course correction? Is our money effectively utilized? There's obviously things around certificate and all are involved, right? CFO has to sign off, so board can obviously rely on him. But there are other governance aspects that board needs to always be mindful of, right? Which kind of intermediary you're using, right? Are you using your related parties and things like that, right? It's not necessary. If you're really doing it in spirit, I mean, you can always avoid things that are on the borderline or gray areas and things like that, right? What kind of transparency and disclosure you're making, right? There's a disclosure that needs to go in the board report. And this, honestly, it is not just for the sake of doing it. Ultimately, it also gives investors and the users and the communities at large a confidence that, look, you're really seriously doing something and that is making an impact. So you look at it from two perspectives, right? One is just the governance perspective, and second is also, what kind of impact it is making on the society.
Thanks, Madhu. That was there. Now brings you said about audit, etc. What goes in. So let me ask Noshir from the other side. With these changes in law, which you mentioned, it's becoming more of rule. I'm sticking on to that for some time now. But with these changes, a lot of disclosures that are there. I've noticed in the last couple of years that the CSR report itself is now running into pages in an annual report. So what are the key factors you would consider in auditing a program? Like you mentioned about impact assessment, etc., large projects, even Madhu and Rema mentioned, right? So what are the kind of key factors that you would consider, and even for a program which is ongoing, which is like a spread over a couple of years? So how would you go and report, and
Sure.
what are the things that you would consider, right?
Thanks, Vinay. That's a very interesting question. I think Rema referred to it that CSR2 form is a very robust form now. It talks about everything. You disclose things like how often the CSR committee met, and you have to disclose how did you arrive %, etc. So there is a bit of the figurative part and also the narrative part. Both have to come true. Have you put up your links on the website, and a whole bunch of all those governance issues which Madhu just now spoke about also get covered. So CSR2 has become something like your ITR form. In ITR, the way you disclose your sources of income and what you have done, CSR2 has become an equivalent of except that this is not concern and tax. This is concern, which tongue-in-cheek, many companies consider that CSR is some charity tax upon us. I do not subscribe to the theory, because there is a certain virtue in CSR. So let's not trivialize CSR to that. But yes, for the first time, the law has brought in two important concepts. One is M&E. M&E is something that you are going to be doing year-round, and it is something that you can do internally. But impact assessment be under the rules that an independent agency. That is the word used. Now, who is the independent agency? So far, are these to be empaneled with MCA? We do not know. It has not happened as yet. Do you do it with the board? Do you do it with the chartered accounting agency? Do you do it with the School of Social Science? Since the word agency is used, one wonders whether it can be an individual consultant. Probably not. It may probably have to be some kind of a registered entity, whether for profit, not profit, but it has to be an independency is what the rules talk about. But so there is M&E, which you can do internally with the health staff or again with some independent consultant, etc. But impact assessment, there is a clear indication that it is different from M&E. And in my opinion, impact assessment is probably one of the least understood terms or concept in this country, and for that matter, I think even across the world. Many people, we know about that if there is a certain input that goes in, there is an output and possibly an out. Sometimes you do not see for even 50 to 100 years. I mean, you can say, put my child in, so after the 3rd standard, I will see impact. You will see there is a certain input that the school puts in the child, then there will be an output from, and there will be outcomes happening year after year. But the ultimate impact of education, we will know only later. Sorry to give this kind of an analogy. But therefore, whereas here it is said, if you are a company with CSR obligation of 10 CR and more, then each of your projects is valued at 1 and more and has completed at least 1 year, do an impact study on that. Who's to be doing it? We do not know. Also, where impact assessment is concerned, most impact assessment reports are basically are talking about outputs and outcomes, if you ask me. I have really yet to come across inspiring impact assessment reports. A real inspiring impact assessment report is one which tells you or it reflects the truth. In reports, we want to show this, we achieved this. Nobody talks of learning curve attached. I mean, you can't say that every project that I was involved with did everything good. There may be a learning curve. We do not talk anymore about mistakes. We do not talk about what did not work, what could be done better. But very few impact reports talk about that. And that is something that I would like to see. So it is basically, we can certainly measure scalability of any program. Has the project scaled from this to this? I mean, out of working from 5 villages, you move to villages. But these are all in the nature of an activity. Impact assessment is talking about real accomplishment. There's a big difference what is activity. And remember, even Schedule 7 speaks about CSR activity. But you have to move from activity to what is your accomplishment. Mere education may not lead to livelihood. It may lead to frustration. That itself is an impact. That you educated somebody and he's saying, my God, waste my time becoming a graduate. Maybe from the 12th grade, you should have told me to do something else. And my impact would have been, I could have been a good tradesman. So impact is a very different thing. And to very quickly touch upon what is my impact is about change with evidence of change. Impact is really about that there is a change that you want to see in the community and there should be the evidence. But we only talk about the good change that happened. I think a good impact assessment report should also about what did not and why it did not work. Also, there is need for quantitative data. That means did skill building actually lead to livelihood or not? Impact is about. Otherwise, you will find your impact report. We trained 100 from the community in skill development. That is not impact. That's your activity. What is the accomplishment? Thanks to the skills we gave, out of the 100 that were trained, 90 found employment or they set up their own business. An accomplishment. That is impact. You have to determine indicators of community well-being. Because of your intervention in certain geographic communities, remember even the CSR rules talk about preference should be given to local areas. So what has changed? Well-being, and we are talking about well-being. The general well-being, has the standards gone up? Because there's a big difference being literate and being educated. You may have created a very literate community. Everyone knows how to read and write. Is it an educated community? And this difference is, and ultimately, much as it sounds very philosophical, but impact in the happiness quotient. Have we made a happier community? Have we made a happier India? I'll stop there, Vinay.
Okay, that's interesting thought on the impact, actual real impact. Rema, my next question is to you. And this is many of them have asked this question during whenever we had informal chat, right? In a collaborative programs where you're collaborating with multiple agencies, etc., and multiple corporates coming together. What do you think the primary challenges that you as a CEO of NASSCOM Foundation, what are the challenges that you would have faced, especially when each company has their own standards, they come together and their audit standards are different, their auditors are different, so they would want the numbers, how it is divided. So just a few thoughts on that.
Yeah, Vinay, I absolutely love this question, because I think going forward, it's all about collaboration. It's about convergence and collaboration with communities. I like to call it the 3C approach, because it's a convergence of all three that can really take your program or your activities in a very limited sense to something which is, which can really become a game changer. And when you look at the CSR pool of funds, people say it's huge, but honestly, I feel in the larger scope of the developmental mandate, the amounts that are required to just take us from where we are to the next level, because India is quantum jumping, right? It's you you have pockets of excellence, you have rural areas where you don't have electricity, there's so much of diversity. And how are we going to really take all this and really quantum jump to a new level? So this can only happen. And when we look at the CSR pool, as I said, in the larger scheme of things, it's not much. And a lot of companies have very small amounts. So, I always feel that every company should do CSR reporting or no reporting, because there's no other high that you get than really seeing the change that you make. And there are a number of NGOs who are, which maybe as a large corporate, we may not be able to fund because of the requirements that we have and, criteria-based approach and all that. But there are n number of smaller NGOs in rural areas where the smaller, corporations, the smaller MSMEs and other people can really fund. They can do it individually, they can do it collaboratively. Now, when you look at collaboration also, there's a very, you can approach it in so many ways. You can approach it with, how do I work with government at an apex level? At a state level, how do I work with state level? At the district level, how do I work at the district level with other stakeholders, with the local administration and with NGOs? And at the community level, how do I work with people? So this collaboration at each level, depending on how much you are able to really invest. Because obviously at a pan-India level, when you want to do large-scale programs, the amount of investment would be larger. And again, you will not be able to do it alone. So take a large-scale program going across India, maybe say something like, say like cancer hospitals, that needs a huge amount of investment. So you need to collaborate with other companies. You need to really collaborate with other stakeholders. Now, this collaboration is also, it may not work all the time because you have to come to the table with common values. So it starts from common values, common objectives, and then it goes into programs. So that needs to be really established primarily. The second thing is, when you really do a program, again, there's a different way of doing it. Do you share resources or do you individually do a program separately? Let me give you an example. Supposing two foundations or two corporates are coming together. Each one of them says, okay, I'll get 1 crore, I'll get 1 crore. I'll do an education, initiative. I'll do the Shikshan Mitra, the teaching, the para teachers, or the books, the modules. You take care of the infrastructure. So together we have a common purpose. We're working in a school, but we both are doing it independently. That's one example of collaboration. Another example of collaboration is that there is this large-scale program. Say again, like I said, you have these hospitals, right? And you have various donors, various organizations, various stakeholders who all come together to that common purpose. So there's a pooled fund available. So there are various ways of collaborating. Sometimes it can just be a technical collaboration. You want experts onto your programs because you may not have the expertise as a corporate to do something. So you have that. Now, again, coming back, if we were to use pooled resources, it would really mean a huge amount of monitoring and evaluation. There has to be a high amount of review in terms of how the finances are being broken down. You can't have this double reporting, double counting, and all those sort of things. So for example, if it's an office space and there are 5 donors, it's the same, the lease for the office space is given to each one of these 5 donors. So the donor also has to be extremely cautious and ensure that that all this is reviewed, it's scrutinized, for all the artifacts, and they are asked to submit all the documents relating to the cause. One important thing is, you see, the NGOs are also very small, and I must accept that many of the donors do not give a huge amount of overhead expenses. So how do NGOs, or how does the common reporting happen, right? If everybody wants it in a different format. But I think what we have done as a foundation is really sit across with the various auditors, the PMEs, the agencies who do the audits, and say, look, can we get a common template for reporting? If it is WASH, can we have a common template? If it's education, can we have a common template? So I think really sitting across the table and creating common templates is the is the way ahead in these type of collaborative activities. So yeah.
Very interesting thing, that concept you brought on the three C's, right? So which brings me to another C, which I would like to ask Madhu. This C is more related to capital expenditure, right? So I mean, it's a well-known fact when we any project or anything that we do, so there is some portion, a little bit of portion that goes towards procuring of a capital asset. What constitutes, what's the regulation around this, and at the end of the year what happens, at the end of the project what happens? Is it allowable, or how does it being treated in company's books? Some thought on that, Madhu.
Thanks, Vinay, again. So this has been one area where there was a fair bit of unclarity until the FAQs came, and even now I think we get a lot of questions on how do you deal with capital assets. And as you would imagine, I think Rema and Noshir mentioned about so many different kinds of projects, right? It's not, again, like I say, it's not about just saying, okay, there's a teacher and cost of a teacher or whatever, right? When you run a project, there is definitely a lot of capital assets that are getting built up, right? So you might build a school building, right? If you're doing something around education, you might buy ambulances and donate it to some rural areas and things like that. You might set up a solar plant and say, okay, I'm focusing on renewables, right? So there are tons of these capital assets that will get built up. Even when we went through the COVID, right? I mean, people obviously donated these concentrators and oxygen and health equipment. So there's definitely asset involved. There's another kind of asset which is company's own assets, right? So one is which you identify by just use it completely. Then there are assets that you use, right, within the company itself, right, which you might use it for other purposes, but also use it for CSR, right? I mean, like your own building, for example, or a specific office or equipment. Now, one of the philosophy that CSR rules are following, and this is fairly rule driven in this case, is the regulations are saying that, look, if your money is allocated to CSR, all of that money, including any benefits that you get out of this money, let's say you get any ancillary income out of this money, that also should go out of the company, and none of that should remain in the company, right? So when you talk about 2%, I think Noshir mentioned, so when you talk about 2%, if anything is unspent, you have to sort of go and within 1 month, 6 months, 3 years, you have to give it to either the fund or spend into another thing. If you earn interest income on that, even that has to go away, right? That money also can't remain in the company. So capital assets follow the same principle, right? So if you because of your project or a plan, you build a capital asset or bought a capital asset, I think the rules say is, if you want to use this capital asset as part of your 2%, right, the eligible expenditure, that capital asset should not be in the name of a company. So that has to be transferred in the name of a third party, which could be your Section 8 companies or the trust or society, or just the company that is intermediary that is helping you. If it is a ambulance, right, it should be sort of transferred in the name of the trust that is possibly running the this thing, right, the hospital or ambulance. Or if it is a building, that needs to be transferred to the agency that is running the school. So I think that is a philosophy. It should not be in the name of the company, and it should be given up as part of the transition, because before this rule came in 2021, there must have been assets that were there in the company's books. So the government gave you time to say, okay, within a period of 6 months, plus that could be extended by another 3 months, you transfer. I think all of that period is over now. But from now on, what companies are doing is that, look, okay, if I'm buying an asset, either you could buy it and transfer it. And even better, some companies are saying, okay, why do I even go through the process? I can buy it straight away in the name of an NGO or a trust or a society, so that I don't have to do this. One of the things that I think regulators must be trying to protect is, you can't, again, Rema mentioned about this double counting, right? I mean, you can't transfer the asset, but still own the asset, right? You're counting this as CSR, but still creating asset for you. That is not the objective or intent of the law. You're also not allowed depreciation on that, because, if you don't hold the asset in your own name, I think, you should not be creating depreciation and things like that, right? So the sum and summary of this is, the asset will not remain in the books of the company. It will be transferred in the name of a agency that, I mean, I'm using the word agency, but trust or a society or Chapter 8 company who is now running your program.
Thanks, Madhu. That gives a lot of clarity. Rema, just a follow-up question which I had from what you had mentioned. Right, I'm looking from the other side of the table. A lot of these MSMEs which you mentioned, just touched upon. I want you to go a little bit of detail in that, in terms of they don't have a large spend, right? So maybe because I'm more so of medium enterprises, I would say maybe a 20 lakh, 30 lakh, 40 lakh. But if I take a total of say maybe 5 or 6 organizations together, that comes to a significant amount. How would they look at how they would want to, which platform, how do they choose where they want to be? Because one is having a CSR thought or a what do you say, vision, but smaller organizations where I have met a few of them where they don't have this vision, but they want to do and they want to make a difference. Genuinely, they want to make a difference. So how would you guide them? Any couple of thoughts on this?
Yeah, Vinay, I think the last I read on these, the smaller pools and the smaller CSR budgets, there were close to around 15,000 companies that had budgets of less than 50 lakh. So that's a huge number, right? And if they are going to take up the CSR reporting with all this cumbersome, onerous forms and other things, I mean, it will be difficult for them to do it, honestly. But as you very rightly said, they want to do something more. The easiest thing is to just cut a check and give it to somebody. But many people don't want to do that, right? They don't want to just do something which is that simple. They really want to make a difference. And the best way, of course, for them is to, I mean, you have a number of organizations who pool the amounts together to create a large-scale initiative, so they can be a part of that. But the challenges will always remain: how do you get eyeball? How do you get brand space, for your company? So these are things that one needs to have clarity on. How is that company, how is that individual or the, whoever it may be of that company, how are they going to be represented on the committee? How is the organization going to be represented if you look at it as an initiative with a large number of donors coming in? So these are things that one needs to be very clear about. How are reportings going to be done? How do you get the fund utilization certificate? How is apportionment going to be done? Because if it's say a 100 crore project and somebody is giving 1 crore, so that's 100th apportionment. So how are those documents and fund utilizations going to be given? So these are all going to be challenges. But really, my advice is, if they don't want to just cut a check, or they don't want to partner with other organizations, like-minded organizations and corporates like themselves, then or just work with smaller NGOs. And there are so many causes like education, elder care, health is a huge thing. And a lot of companies cannot help. It's a larger companies may not be able to take up things like if somebody wants intervention in health, or somebody wants help in medical issues and other things. So the smaller pool of companies can actually work with good NGOs and really create that change, that life-changing and life-giving sort of initiative. But having said that, if they want to do larger programs with many more organizations and be a part of a larger story, right? Because that's also exciting when you take up a pan-India program and you say, I'm aligned to that, but you can't do it. So, if they want to do that, then the way, of course, is like a foundation, you get into them, or an industry association and others who are doing this type of work. Yeah, Vinay.
Thank you. Thanks a lot. Noshir, next question is for you. I mean, it is another one of the favorite questions people are asking in the chat box as well. Are there areas where you feel there is more clarifications needed or challenges faced? Okay, I would say, I know there are many, but I would say when pick some 5 or 6 challenges faced in implementation of CSR.
Sure. I actually have 5 in mind right away. One is practical issue that people facing. As you know, CSR implementing agencies must be a society or a Section 8 company, having both 12A and ATG and a track record of 3 years of service. Now, the challenge comes here. Section 12A registration with income tax is about your tax exemption, and ATG is about the tax deduction for the donor. Now, there are many NGOs which are wholly for educational purposes or hospitals, and their tax exemption will 1022. They have an income tax has now given you either seek exemption under 12AA, which is now become 12AB, or you go under 1023C. If you are an educational institution, you are a hospital, etc., it's a much better exemption. Form CSR1 does not accept 1023C. You are stuck over there if you have 12A. So it's almost a punishment. You have a better tax exemption, doesn't recognize you. Under ATG, the tax deduction for the donor is 50%. Much better one for scientific research and statistical research, 3512 and 3513. If you have got that, again, you are penalized. You will not forward. So the requirement to be a CSR agency is, yes, you are a trust society and a Section 8 company. You have tax exemption, but not 12A. You have got 1023C. You have a tax deduction which gives 100% deduction as opposed to 50%, but you are not qualified. You are more than 3 years old, but you have a problem here. This is the first problem I would identify, and it's a serious problem that some organizations think. Second is grants versus works contract. Many companies treat their implementing agencies vendors of commercial services. Unke saath vendor agreement kar do. I mean, which means there is a component of TDS. They insist that the NGO should have a GST registration. Please understand that a grant is in the nature of a gift. It is, let us say, yes, it is contractual with the recipient organization, but this is not to be confused with a works contract or a vendor. So there should be no element of GST on this. Yes, I'm also aware about the Maharashtra AR recent ruling that grants have GST, etc. It is of the Maharashtra AR. A higher authority is likely to, and I'm using the word likely to, give a better ruling in this regard. The second thing is about refund of unspent amount. If the company is doing CS own, and if there is any it needs to put into an escrow account, which is called the Unspent CSR. But must the NGO, which has been also given for a multi-year program as an ongoing project, also refund it to the company? Of abundant precautions, many companies are telling them to return this money. I gave you 1 crore of rupees. I'm supposed to give you 3 crores over 3 years. In year 1, I gave you 1 crore, but you spent 90 lakhs. Okay, 10 lakhs. In March, you return it to me because that is unspent. Or let us say last week of April, preferably first March, you return this money. I will put it in escrow account. And when I give next tranche, I will give you another 1 crore plus this unspent. Is there a necessity to do that? It remains a gray area. In my opinion, if it is a multi-year project, all that the implementing partner has to do is give a project utilization certificate. It's a multi-year project. In year 1, this was received. Yes, there is an unspent of 10, which the NGO is aware of, is going to carry forward in the next year, along with the second tranche. MCA will give us further view in that regard. Now comes the real catch. I mean, if you have given to an NGO 1 crore, is the company organization to treat it in its income and expenditure account as income, or is it going to show it as a liability? I believe that if there is a refunding element over there, it should be booked as a liability in your balance sheet and not as income. Is the company going to take ATG benefit on 1 crore, or is it going to take on 90? Technically, it should be on 90 only. The worst part, if it is a company which is due CSR fund, the Ministry of Home Affairs will allow you to refund the money. So there are many banking corporations, as we know, without naming any, which are working under license of an RBI. They are not registered under companies and therefore treated as a foreign source under FCRA. So although the money may be received in India in Indian rupees, it's still a foreign source you have gotten your money from. You will not be able to. So these givers and recipients both need to be aware that in certain circumstances, money cannot be returned. So major challenges, and the final, can we work with for-profit social enterprises? A very famous one. A for-profit social enterprise would probably be an LLP or a private company. So they definitely will not come under the definition of like to call what do we say, CSR implementing agency. But if the company is doing CSR on its own, then it's certainly should and can engage with them on a works contract basis if they so wish to. And this, of course, my analysis of what are these gray areas. So I'll stop there in the interest of time, Vinay.
Thanks. Interesting. You brought about the FCRA. Maybe that's a topic for some other day, or it's a topic by itself, a subject by itself, right? So, Madhu, quickly coming to you, if you could quickly let us know some of the leading practices, because a lot of people, a lot of participants would like to know what are the leading practices, just in few bullet points that companies should keep in mind, and what you have come across so that the corporate CSR framework is completed.
Sorry. No, so there are companies who are doing, see, like I think we heard, right? Companies really want to do this and do it in a manner of substance. There are some companies who do it better than others. There's some people who have more energy than others. There's some people who have cracked it. Many, is going through the journey. But really, it is like learning from what is going on and who's doing it better, right? So from that perspective, I think some of the leading practices we see is really driving this as an organization culture, right? It can't be a team, 5-member team sitting in isolation and running CSR with nobody knows, right? I mean, you spend 2 crore, 5 crore, 10 crore, whatever it is. So how do you build a culture of CSR within the organization? Just like you may have a better governance culture or people culture or whatever other health culture, etc. Build a CSR culture in the organization so that one, it is not just visible but encourages people to participate, right? Second is, how can you involve employees? I think, again, one of the, speaker earlier mentioned that, right? It may not give you a benefit or a monetization, but when you have the entire population working towards it, your employee participating, going to a school, going to an event, going to a, it does a slightly better, it has a slightly better impact, right? Noshir talked about impact versus output, right? I mean, really, it is multiplier, right? I mean, you may be spending something, but it gets like to 100 people and then 100 people's families and things like that. So include inclusiveness into that practice. How do you make the process a little bit more transparent and better disclosure? Not everything is written, right? Companies Act says you disclose 1, 2, 3, but it is up to the board. So people who are governed better will obviously go out of the way and say, okay, look, this is what my disclosure is. This is what I'm doing, even if it is voluntary. So we see some of that coming up. Noshir did talk about output versus an impact. So there are companies who are measuring impact, right? Not just saying I did 1, 2, 3, but can you get to that impact, right? How much carbon, how much employability, how much income generation, that you've added, as opposed to saying I train 100 students, right? I mean, what is the employability of how much their families have earned from it, right? So that is one part of it. In terms of evolution, I think, obviously this is a journey, like I mentioned at the beginning, right? There are things that could be done even beyond this. And country will definitely, look into it. But for example, how there's a theme of ESG, right? I mean, we're talking about ESG into the future. So how this can be combined into a larger theme of ESG and take the country to the next step? How can we encourage younger generation, right? I mean, from a regulator perspective, think about it, right? We are starting this as a rule, but can the children be taught about this thing right now at this age so that when they get to the next generation, this is not a separate topic. This becomes part of life. Like, I mean, how we behave in a normal world, I mean, they will just not think that this is something else. This is just my behavior, right? That is another one. And I think, can we do it through technology? Can we do it in the areas which needs the most as opposed to doing what is convenient, right? I mean, there are some areas people find convenient, but can we go to the area which needs a fund? I think those are the evolution that government can facilitate. Obviously, the use of technology can really make a big difference right now, because I mean, we've all learned it. People at a remote areas also now familiar. That can again multiply the benefits. So conscious of time, but I mean, there is a way to go, and I'm sure as a country we will cover that journey.
Thanks, Madhu. I just one question to all three of you. Just a conclusion session. We have already overshot the time, right? Business promotion branding, which is a favorite, and it's more controversial, and it's a heated topic of discussion. Nothing. There's no set rule, right? Your thoughts on that? Noshir, if you could go first, and then maybe I'll come to Rema, and then last Madhu. You're on mute, Noshir.
Thank you, Vinay. As I was saying, right, when responding to your first question, I refer to that so-called negative list. And one of the things you find in the negative list is that activity supported by the company on sponsorship basis for deriving marketing benefit for its services is not CSR. They have made it very clear. It can be more clear that if it is your marketing function, then it should come out of your PR budget. It should come out of your marketing. If it is your HR function, it should come out of your HR budget. You CSR as an omnibus to cover your HR obligations, to cover your marketing obligations. You cannot be doing that. So it's like this. During the pandemic, if you told people that washing hands is good for you, and if it's a company doing that's because it is promoting preventive healthcare, because preventive healthcare is covered under the schedule. But if at the end of it, you'll also say, my hand wash is the best, then you got a problem there. That's not CSR, that's marketing. You have people who are making masks, wearing a mask is very important during the pandemic. But my mask is made out of so many microns, etc. It destroys so many, the viruses can't get through my mask. Use this brand, that's marketing. So, and you have to distinguish between what is acknowledging support versus censorship. So if you have a health camp somewhere that you have, where you say this health camp, which is for preventive healthcare, or it may be some kind of a vaccination program, a little bit about is done that, okay, it is by XYZ pharma company, no problem. So you got the umbrellas to give shade and which has XYZ pharma's umbrellas over there, perfectly all right. But you are now also going to market some of your medication over there. You are going to be giving free samples to doctors there. I think you distinguish between acknowledging support versus trying to gain some marketing benefit out of CSR. So I'll stop there.
Rema, do you want to go next? Just quickly.
Yeah, Vinay, I absolutely agree with Noshir, and he's captured the nuances of marketing, sales, sponsorship and branding absolutely to the T, and each one actually leads into the other, where you get a brand, goodwill and marketing. And CSR, of course, is always a vehicle, right? Because you have that intangible goodwill that flows in the company for doing good. But I look at it in another way. I look at it that a corporate is getting into the CSR because it's a responsibility. You can't be in isolation. You cannot have wealth in isolation and exclude all else. And if you remember, this entire CSR law was started with working in and around the areas of the factory. So, it started with that. You can't be an, exclusively excellent isolation and an island in that midst of all that poverty and other things in some rural area. But I think over the years, that's got sort of diluted. It's still there, but it's a bit diluted. But having said that, yes, marketing is marketing. Branding is absolutely branding. And the intangible goodwill that you get out of sponsoring will flow into your marketing budgets and other things. So I, for one, feel that CSR has to be kept separate. We at the foundation here, we keep it very separate. We do education, we do primary education and, WASH, environment and other things. There's nothing to do with financial literacy, which we run through our other company. So, so for me, I'm very clear, and the law is also very clear. Income tax rules are very clear when it comes to CSR's foundation, when it comes to other organizations. So I have no doubt in my mind. I think it's well that we should keep that clarity also, so that we know why we do CSR and what the reason is for doing CSR.
Madhu, from third point, from the other side of the triangle.
No, so great points already made, right? I think, there is definitely a clear demarcation between branding and CSR. I just want to add that this is still a little bit of a gray area, right? I mean, there's no black and white here. Companies who want to really do it in substance and keep it completely away from a brand, it's very easy to do it, right? Because there are hundreds of areas. You don't have to do it in the area that you are also functioning. But there's also an argument that that is one area that you understand better. You have the expertise. You can drive it more productively. So not using this for a marketing, but doing something in that area which can give you an incidental benefit. In fact, the law tells you that if you're doing a CSR and because of that there's some incidental branding happening is different, but you can't definitely do it for the branding and a marketing purpose. Like think about it, right? A hospital saying I'll give you a 50% discount if you come to my hospital. I mean, what is it, right? I mean, there are people who ask these kind of questions, right? Clearly, you're marketing, right? You're not giving something, but if you can give it to free 50% to any other hospital, that's CSR, right? You're helping somebody get better, right? I mean, so that those kind of things are always there, but I think it is quite judgmental, right? I mean, there are gray areas. I mean, there's a very small difference, especially if it comes to your own company's product and services, or the areas that you specialize in. What is a CSR and what is? So I think, like Rema mentioned, it is always better to stay clear of this gray line rather than going on the gray line, I would think.
Thanks, Madhu. Okay, I think we are kind of overshot by about 10 minutes. So I'll quickly take a couple of questions from the audience or participants who are here. Let me just try and read out. Most of them have already been answered. One of the things that which I think was covered, if a corporate has been, the participant doesn't want to be named. So if a corporate has been funding the program for 4 years, an ongoing program, what are the compliance measures that need to be considered? So maybe Noshir, if you could take the first one,
Yeah,
and
sure.
Madhu, if you could add, if anything, from an audit point of view.
I think from a pure compliance point of view, I think the agreements between the two parties must be very clear. So if it is a CSR grant agreement, it should quantify the time frame over here, that this is a multi-year program which commences in financial year technically 21-22, and it will end in financial year so and so, and this is what needs to be done of year 1, year 2. So I think you need to have a very clear concept in your mind, and I'm talking of the softer side of the compliance, so we are not talking about the financials. To some degree, the budget allocations will be. So I think it's very important that, of course, the grant agreement is subject to tweaks depending upon pitfalls that you might find upon going forward. I mean, certain things may not work, etc. But I think the first grant agreement that is made in the year of commencement must make it very clear this is the program of years, and of course, not counting the year of commencement. This part has to be entered and signed by both parties. This is essential because the grant agreement is contractual between the two. So that would be the starting point with some clear interest in terms of what are the goals, aspirations, and what is going to be the output and outcome. Possibly if it is a company that also needs to do impact assessment, at what time impact assessment will be done, how M&E will be done, and a whole bunch of all these requirements need to go into the grant agreement. So I'll stop there. If others have some additional, particularly Madhu from a financial point of view has inputs on that.
Sure. No, I think Noshir, you covered the point. So I think really from a compliance point of view, obviously you got the entire company's Act compliance, right, which is all listed. There is no point. I mean, we're not going to go through checklists one by one because there's a detailed, clear guidelines, and then there are some other areas like you mentioned about grant, etc. So yeah,
perfect. Thank you.
Next question, Madhu, and Rema, for both of you, I mean, if you could add, this is from Pradeep Kumar. There are two parts to that question. So one is, if the CSR funds are utilized through companies' foundation, right? What are the compliance towards corpus that has been generated through CSR projects? That is the first question. And in reporting format, what details need to be furnished?
So no, thanks, Dinesh. So Pradeep, basically you heard the earlier question, right? One of the rules which says is that, let's say if your obligation is 100, you put that in the foundation. And if I'm getting your question correctly, let's say foundation generates some income out of this thing, right? Either in the form of interest income because you park this money temporarily somewhere, or there is some sale of some equipment, residual thing that is happening. So, you will get that income. Now that generation cannot come back to the company. That is the rule, right? So if your obligation is 100, you end up generating 2 rupees of income on top of this, then you need to add this 2 rupees to 100 rupees and spend 102 rupees and not just 100. So your obligation increases. And the summary of it is, again, like I said, this extra generation can't come back to the company. It gets added to your CSR obligation. So I think the rules are, at least to that point, it is absolutely clear. Now that applies whether you do it through foundation, whether you do it on your own, and whichever way you do it, I think that's the real rule. And sorry, Vinay, you asked the second part of the question, so I can hand it over to Rema after that.
The second part is in reporting format. What are kind of details that need to be furnished?
This is a very rule driven, so we are not obviously putting this up here.
Correct.
But I think there is a detailed disclosure. In fact, it goes tabular, right? I mean, they've given tabular disclosure, right? And I think Rema touched or Noshir touched about this, right? What is our list of ongoing project, your amount spent, not spent, whether you deposited the money, within 1 month. So this is a fairly, I would say, tabular disclosure. This is quite voluminous because you're doing multiple disclosure. One is to the board, second is on your website, third is on your annual report, and then number of documents goes within that, and fourth is to the MCA portal, right? I mean, all the CSR1 form, etc. So you possibly have to have a good system to make sure your disclosures are consistent, right? More than just the volume. So, but Rema, feel free to please add to this.
Yeah, you've captured most of the major things, but I just like to add a very small thing, which I'm sure they would be doing at any rate. That's if you're a foundation, then there would be an MOU with the company. So what you will undertake and what you're going to do with any interest or any other amount that will be earned either out of projects or as interest on the corpus or whatever that may be. So definitely you would have to define all those things, and definitely I'm sure you're doing it, that these can't be used for other activities but would go to the objectives of the foundation, which would reflect the objectives of the CSR of the main company. So that is one point. And secondly, yes, whenever you do the foundation details, it would be the foundation that would be the implementing agency. And I'm not sure in that, in that table whether it gives you scope to put the local implementation partner's name as well. So it would be a foundation that would be there. Third point is that you're talking of transfer to a foundation directly, but I'm sure, again, and I'm sure you're doing this, it would be subject to what your boards, the CSR committees approve, which in turn is approved by the CSR, your board of the foundation. And, it's not just a transfer, but it is a specific transfer to a specific objective. So it's not a sort of blanket transfer of a CSR fund. I would also suggest that you ask for funds as and when you utilize it, so that that entire loop is also completed in terms of how much you have asked, what the utilization is, and then you call for the next tranche of the CSR fund from the company. So that would make it more, I know it's a little cumbersome, but I think that would be the right way to do it. Yeah.
Thank you. One last question is that if a company is actually spent more than their CSR spend for the year, how do they carry forward? And because some of the projects may have initial higher spend and then very little during the subsequent year on monitoring. So any thoughts on some clarity on that is what.
So offsetting is allowed, yeah. I mean, under the rules, spend more than 2%, offset the whatever. Let's say instead of 2%, you manage 3%. So that balance one, you can offset it over the next 3 years, is what the rules allow. So it's something that has changed under the January 21 rules. Prior to that, even if you overspent, it really meant nothing. But now there is a provision that you can offset it over a period of 3 years. So that's what the new rules do talk about.
Okay, anything to add, Rema? You were saying something.
No.
Yeah.
Okay, I think we have run out time. So Ritu, back to you. And big thank you to the panelists, Noshir and Madhu and Rema from my side. It was very wonderful interacting with you. Ritu?
Thank you. Thank you, Vinay. Welcome to poll number 2. Participants, I would encourage you to take the questions that come up on your screen. Scroll down so you can answer all 3 questions. give it just a few more seconds. I encourage more people to participate. And a few more seconds. I think we're good. Could we share the results, please? Great. And so we're happy to hear that 70% of the audience feels that they have more clarity on the recent amendments, thanks to the exhaustive panel discussion. So thank you very much, panelists. And there's a whopping 89% who think having a dedicated team for CSR spends helps greatly within organizations. The third one around, would you like to partner with NASSCOM Foundation in delivering their CSR programs? Well, we'll take this as feedback for ourselves. And thank you very much for sharing this. With that, I would now like to invite Sanjeev Chaudhary, who is Director for Strategic Partnerships and Alliances at NASSCOM Foundation, for the closing address and the vote of thanks. Over to you, Sanjeev. I can't seem.
He has an issue with his connection, so.
Oh, okay. All right. So I would like to express my sincere thanks on behalf of Sanjeev to the entire panelists, to the entire panel discussion, and for the panelists for sharing their views with the audience. Thank you very much, the audience, for taking time to attend this session. We are hoping to have more of these knowledge series, and we'll keep you informed as and when we organize these. Look forward to hearing from you. You can reach us at the partnerships email ID that I will share with you in just a minute. Besides that, contact information for reaching out to NASSCOM Foundation has been shared with you in the chat box, and I'm hoping that you will make the most of it as we go ahead and help us plan these sessions even better. Thank you very much once again on behalf of NASSCOM Foundation. It was a pleasure to connect with everybody. Thank you.
Thank you, panelists. Thanks, everyone.
Thank you. Bye-bye.
Bye-bye. Thank you.